how many times value did the standard house increase by. So the 20 years ending 1960, so the 40s and 50s, capital city house prices increased 3.6 times. The next 20 years, so the 60s and 70s, house prices increased sixfold. The next period of time, so we're looking at the 80s and the 90s, they increased 4.4 times. And the most recent 20-year block, they increased 3.7 times. Wrap all that up, and what that says, 80 years of evidence, there's a pretty good chance, Bushy, no matter where it is in Australia today, you buy a property today, and 80 years of evidence or so, it'll be worth at least 3 times that, maybe 4, maybe 5 times that over the next 20 years.
Welcome to Get Invested on the Property Hub podcast channel, the leading weekly show for Australians who want to learn how to unlock their full self, health and wealth potential. I'm your host, Bushy Martin, and each week I go deep with the best investors, experts, leaders and founders to find out what it takes to break free from the grind, discover freedom and to live by design. Subscribe now and join me and get invested in the life that you really want. Let's get started.
Hi, freedom fighters. Does population growth really drive property prices, or is that just pub talk? And do interest rates predict price moves, or is that just another red herring? Well, today you're going to find out. Following on from our recent Getting Invested 400th show celebrations, where I revealed that I'll be taking some time to eat my own recipe for a much-needed self-health wealth reset sabbatical in order to reprogram some of my old entrenched subconscious stories that are having a bit of an impact on my health so that I can recharge the batteries and resharpen my brain and my body. Well, today we start by reopening the Rolled Gold Property Hub vault. In between some new interviews and a lot of bush banter, in order to reshare and reinforce the most popular evergreen gems that we've recorded over the last 8 years from amongst 1,000 interviews or more with industry-leading property and proven professionals. Now, this is the stuff that doesn't date because underlying property principles and fundamentals just don't change. Only the headlines do. So this week, we're kicking off a big fan favourite, when Simon Pressley shared his history of property learnings and timeless property principles evidenced over the last 80 years, way back on episode 580 of Realty Talk. Now, Simon is Australia's #1 thought-leading property analyst. He's a Real Estate Industry of Australia Hall of Fame inductee, and he's the Director of Propertyology, the data-driven borderless buyers agency that's been mapping the market's long ways for decades. And he's the man that I affectionately call the Warren Buffett of Australian property. And he's a fierce Brisbane Lions supporter. So go the Lions, Simon. So on this rewind, Simon and I zoom out across 80 years of Australian property to answer all of your questions that actually matter, including which world-ending shocks actually change property and which just change the headlines, what did rent controls do to supply, and why are we repeating history in this regard? And most important, what hasn't changed at all in relation to property values, rents, supply, and affordability gates, as well as what's likely to happen next. So if you crave timeless over trendy, then this one's your compass. So let's get invested and roll the tape with Simon Pressley on what 80 years of property has taught us.
Now, the German philosopher George Hegel famously said that the only thing we learn from history is that we learn nothing from history. And nowhere is this more true than in the wonderful world of property, where everyone mistakenly thinks that current property conditions are always unique and different from the past. But if you've been involved in property for as long as today's special guest and I have, you'll know that history generally rhymes. Today, we've got the opportunity to put this right and to learn what property history lessons have taught us. So, welcome back to the Property Hub's Realty Talk Show, Simon.
G'day, Bushy. I'm really looking forward to this chat. It'll be quite nostalgic, I think, some of the things we're going to be talking about today.
Absolutely. I am probably going to reveal my age through our discussion, mate, but there's a lot of having a look at some of the stuff that you were suggesting we're going to talk about today. there was a lot of very fond memories that were emerging from that, mate. So I know everyone that's tuning in is going to get a lot of that out of the discussion. But just to sort of kick things off, Simon, can we start by getting you to paint us a picture of what Australia looked like way back in 1943 compared to how it looks now, starting with population and some other metrics?
Yeah, so for 1943, for those who aren't great with their history, we're in the back half of World War II. Of course, World War II finished in 1945. Australia had an enormous rental crisis. We sort of, before the war, we already had a dire shortage of rental accommodation. And then when Australia chose to participate in the World War, not that we were given much choice, but we literally could not build any more homes, zero homes, because our skilled workforce was off fighting for our national security. So the rental crisis in 1943 was very much there and about to get worse for decades to come, as we'll go through. And national population back in 1943 was just 7.2 million. It's 26.3 million today. You'll find this interesting. Today, there are about 1.1 million Australians who are 80 years or older. So they were born at the start of this 1943 period that we're talking. Life expectancy back then, it was expected that, you'll live to roughly age 65. Of course, it was quite normal for people to die 50. I mean, you and I'd be gone by now, mate, if we lived.
Yeah, be dead and buried.
Absolutely. Never to be seen. But, today, the age expectancy is about 85 in 2023. The total population in 1943 was 7.2 million. Australia today has 7.2 million people that are aged 55 and older. Crazy stuff.
Yeah, really interesting stuff, mate. Sort of diving onto the population piece that you mentioned already, what impact has population growth had on property values over that extensive period of time then?
Not a lot, of course. I mean, population growth does influence property prices, but lots of things influence property prices. There never has been, whether it's 1943, 1973 or 2023, there never has been a direct link between property price growth and population growth. This graphic here looks at from 1970 to 2023. The green columns there is the combined capital city annual change in median house prices. Yep. And the blue wavy line going up horizontally across the page there is the population growth rate for each of the last, 53 years. So you can see that Australia has always been subject to high population growth rates, but it's not like we can say a pattern where the years that we had the highest population growth produced the highest property price growth. That's never been the case, even though the banks and the economists of the world always preach population growth. It's bollocks. This graphic shows it's bollocks. And the recent reminder of that, the 2 intense years of COVID, Australia actually had zero population growth. We've got to go way back to World War I, Bushy. So we're talking more than 100 years ago, that the population growth rate in this country was that low, but yet we had our second biggest property boom without any population growth rate. So, it's never been a big influencing factor. For those who are curious, the start of this period, 1943, a brand new home, you would have paid between $2,000 and $3,000, depending on which part of Australia you're living in, but that's what you would have paid.
And you spend that on the front door now, mate. It's a pretty interesting comparison when we look back at that. Now, how have the major towns and cities changed over time? And I'd love you to share some examples of how that looks, if you could, please.
Yeah, I mean, well, I guess the pecking order is one thing that people might find interesting. So back in 1943, Gold Coast was nothing then like we know it today. In 1943, Gold Coast didn't even technically exist. There was a series of very tiny villages, about an hour south of Brisbane. Nothing that you could really call a town. But now it's Australia's sixth largest city, and a very densely populated one at that. One of the top 3 fastest growing regions in all of Australia. So that's the Gold Coast. Canberra, back in 1943, even though it's our national capital, Canberra was only our 16th largest city in 1943. It's our 7th largest now. Perth, back in the 1940s, was big in terms of it was a capital city, but Adelaide was a significantly bigger city than Perth back then, about 47% bigger in terms of population size. And jobs are different. Back in the late 1940s, 1950s, 21% of Australia's workforce was in manufacturing, 9% was in agriculture. Today, about 14% of our workforce is in manufacturing, and only 2% is in agriculture. Of course, the services sector is taken up a lot from the manual labour days.
Big shift, which would have an impact on where people live and how they live. You've touched on this already around the population piece, but I'd love for you to take us through some examples of how population growth looks versus housing values, and with some specific examples that we talked about previously around Launceston and Townsville in particular, if you could.
Yeah, absolutely. And look, I could have picked any one of the 400, towns and cities across Australia, but we always talk about the big cities, don't we? Brisbane, Sydney, Melbourne. So I've chosen Tasmania as a southern-based city. Some people won't be aware, but Launceston is Australia's fourth oldest city. It actually was founded well before most of our capital cities, and today it's still a very sizable, 34th largest city. But its population has grown. It's grown everywhere. Yeah. It's grown at different rates. The population growth has grown at different rates in different townships across the country. But population's grown, cost of housing's grown. Launceston would have paid about $5,000 for a standard house in Launceston in 1950. Today, you really won't get much change out of $650,000, to be honest. And I can say that I've got a stake in Launceston myself. Population at the turn of the century, Launceston's population was about 19,000. Today it's about 90,000. So, it's grown a lot. And look, I'm biased, but one of the most special parts of the world, I think. Townsville in the far north of Australia, it's evolved incredibly. One of the most diverse economies in all of Australia today. But its roots, it's our front line for our national defence. Townsville is Australia's military capital. But it's great for manufacturing and precious metals and tourism and education, health. Its population was about 10,000 people at the turn of the century. Today it's 200,000 people. One of our biggest cities, one of our top 20 biggest cities. But, adversity, we'll touch a little bit on that. But, Townsville over the last 80 years, it's had cyclones, it's been involved in wars, it's had recessions, it's had a GFC, it's had a health pandemic. The cost of a house has gone from $1,000 to $450,000 so over the last 80 years. So, mate, everything grows no matter what you throw at it. Housing, shelter at the end of the day.
Spot on. Some really good examples there. Now, I'd love you to talk us through some of the biggest property-related changes that you've just started to touch on that have occurred since the 1940s, starting with migration and also how our neighbourhoods have changed over the years. This is where the nostalgia is really going to kick in.
Oh, absolutely. And you and I, not many of our listeners will be old enough to remember this stuff, mate, but in our 50s, we can remember this. So, coming out of the war, Australia, yes, we were attacked. Darwin was wiped out. Other parts of Australia were bombed, but largely we got through World War II unscathed, and we were lucky. We dodged a bullet, excuse the pun, but we recognised that we might not be so lucky if there was a third World War, and we must populate. Our Prime Minister back then, populate or perish, was one of several famous sayings that he used. Yep. And we targeted the POMs. Australia is the convict country at the end of the day, and it took us a long time. They ruled us for a long period of time. So there was this term some people might have heard of, 10-pound POM. If you were a POM, you literally could pay 10 pounds, and I think it took you about 16 weeks or something like that. The only way to get here was by ship. Yeah. And you could come to Australia for a new life. And we just put so much marketing into the UK to say the great Australian dream. And so we had the 10-pound POMs from 1945 to 1972, 1 million POMs relocated to Australia. In the back half of that period of time, it wasn't just England. There's a lot of culture today, Italy and Greece and lots of other parts of Europe that sort of come after the 10-pound POM. So that was a big change. Our population grew a lot from that, but we become a lot more culturally diverse. The things we enjoy today is largely a legacy of how we responded to World War II. I just love the way our neighbourhoods have changed. Well, we've got a graphic here. This takes me back to being at my grandparents' place, as a 10-year-old playing cricket in the backyard, which was what you did for entertainment back then. You weren't stuck on a device like our kids are today. But this backyard is almost exactly carbon copy of my grandparents. So people are wondering, what's that Besser brick, ugly thing there in the yard? That's what they call an incinerator. Now, what that was, you didn't have recycle bins like we got these days that the council pick up. And your rubbish bin was the old galvanised tin can thing, which you only fit so much in. So most backyards have the incinerator. So you would burn your own rubbish and smoke would go everywhere. Too bad if you're a hay fever or asthma sufferer, but that was in pretty much every backyard. And the old-fashioned Hills hoist, well, that come out of, about 1953-ish. Now, probably you and I used to swing on it, and our parents would be whacking us over the head with the mop saying, "Don't do that, you're going to break it." But that's where we hung our clothes on. The Victor lawnmower, that come out of the 1950s as well. Some not so pleasant stuff. We had a major problem trying to build enough homes for decades, really. And one reason was we haven't got enough timber to build the home. Skilled labour was the biggest constraint, but materials was also a serious consideration. So we developed this fabricated product called asbestos. So we're laughing at it now because it causes cancer. It's outlawed now, but from 1945 to eventually being outlawed in 1985, pretty much any home in Australia that was built in that 40-year period of time, either all of the home or most of the home was with asbestos. Home sewerage, it sort of started to come in at the turn of, early 1900s, but it wasn't until 1950, which is not that long ago, mate.
No.
It wasn't until 1950 that sewerage was a regulated requirement to be put in new homes. So there were still plenty of homes in the late 60s that didn't have home sewerage. You were still going to the old, what they called the traditional thunder box.
Well, I was sharing with you in the green room when I grew up in the booming rural metropolis of Goroka in Western Victoria. We had a drop pit toilet, Simon. I remember going out there on rainy, cold nights and dropping the torch down the pit to see my grandfather come out with a magnet and a string to try and hook it out of the sludge as a beam of light shone up from the slime below.
Well, as we said earlier, mate, there's more than 1 million people that are still alive today that live through that. So things change quickly. It wasn't until around about the 60s that there was any form of commerce in the suburbs. So certainly any white-collar service, any bank, the accountant, the solicitor, 100% of them were in the CBD. The only form of commerce that existed in the suburbs was the old-fashioned corner shop. So this is before Coles and Woolworths become the big conglomerates that they are today. But groceries, and we talk. So in the 50s, maybe every second house had a car, which means that the other houses didn't have a car. You got around a lot by push bike, and there's not too many groceries you can carry on your back while you're traveling your bike, or walk. So most of us bought our groceries, the whole shop, not just a bit of milk and bread, from walking 500 metres or wherever it was to the corner shop. Now that existed through to the 70s, really. Yeah. But as I said, all business, you went into town for that. In the early 1970s is when supermarkets progressively started to be developed in suburbia.
Yep.
I'm a 1970s baby, so it was about that time that the Westfields of the world started to pop up, but they were a lot smaller scale than now. But that was the start of going to one venue for multiple different retail shops. And then that sort of progressively from there, we would start to see a real estate agent pop up in the suburbs and that sort of stuff. But that's not that long ago. Also around the 70s, maybe a little bit earlier, the 6-pack block of units.
Yep.
They started to pop up, and we have a look at them now in places like Sydney and Melbourne. They'll go up 100 stories, but 2 or 3 stories. We started to see those in that period of time. The rise of the middle class that happened in the 60s and 70s. We're talking, we're measuring miserable at the moment with inflation being at sort of 7%. We had decades, mate, where it was in double-digit territory. But, of course, whilst the cost of everything went up, the wages, went up a heck of a lot as well. What we call fried egg town planning. So, again, from about the 1970s onwards, the town planners recognised that we want the cities to become more densely populated, so progressively the apartment blocks got higher, but we want more business there. We want to get everyone to come into town. The first casino that Australia had was in Hobart in 1973.
Yep.
Seems like poker machines are everywhere these days. Fast food, that really took off. It started to come in the 70s. The Golden Arches, Macca's, come to Australia in the early 70s, but they weren't on every sort of second corner until the 80s. KFC, Macca's, Hungry Jack's.
Yep.
We used to have children freely roaming the street, and we were very comfortable as parents that they were safe. Not these days. Cubby houses were everywhere, tree swings, 2 household incomes. They become more increasingly common in the 90s.
Yep.
Now a lot of households have two incomes. The regional expansion, that probably really started to take off in the mid-90s. And not saying that every regional town did it, but it depends on their local assets, whether it's natural resources or farming or food production, whatever. Infrastructure, the 90s, we invested a heck of a lot in airport infrastructure.
Yep.
And air travel started to increase a lot. The 1990s is when the really, really high-rise apartment stuff really started to kick in. And, of course, the digital platforms in real estate, realestate.com, Domain, it was the very early 2000s. We take it for granted these days, but this time 20 years ago, they sort of only just started. Property data, CoreLogic Australia didn't exist until about 11 years ago.
That's right. I remember back in the 90s combing through the newspapers with a highlighter and then getting out the street directory to try and weave a path to look at all the properties all day Saturday.
Yes.
Just about every weekend we're spending the car driving around looking at properties. It's a far cry from scrolling with your finger on the phone these days, Simon.
Yeah, yes, a heck of a lot of change. But it's when you go through it like we have in the last 5 minutes, we've packed a lot in the last 80 years, haven't we?
Massive change. I think we forget, until talking about this, there's a lot of stuff I'd completely forgotten. And the change has been exponential, particularly in the last couple of decades. So I'd love to get your thoughts on how we fared also in terms of household size, the transport infrastructure impacts, the regional city development, and any relationship between Australia and our global economic ties. So what's your research telling you on that side?
Yeah, look, I mean, I've literally devoted years to reading, the old archive newspapers, and it's fascinating stuff. Some of it you remember, as a young kid, and some of it, I wasn't even born, but a lot's changed. So coming out of the war, suburban development of housing estates was, on steroids, but the standard block was sort of 800 square metres, and most houses were built for 3 bedrooms, whereas these days a lot of them are built 4 bedrooms. When we look at census data, the official numbers, the average annual the average number of people per household in Australia back then was 4. That's progressively reduced to today being 2.4. But
big drop.
It is a big drop. But it's funny, we've got, over that period of time, we've got households with less people in them, but the houses themselves have become bigger and the blocks have become smaller. So we are really, causing some of our own problems. But what was also common, probably up until the mid-70s, to be honest, Bushy, lots of households, it wasn't just family members living in them. Because we had a dire shortage of housing, it didn't, correct itself with proper policy until the 70s. Yeah. Lots of single people really had no choice but to hire a room from someone. And that was common. What we know today to be a boarding house, which might be, someone living in the country who's been sent away from, by their parents, lovingly, of course, but to school and sort of live on campus. That's what you and I associate with a boarding house. But back then, it could have just been a big home with 10 bedrooms and 20 people living in it.
Absolutely.
And they were renting a room each. So that's a big change. Transport's changed a heck of a lot. At the start of this 80-year period, trams were arguably the most common form of transport.
Yep.
Progressively, each household got a car. Now most households have got two, but that took a long time. Buses sort of started to progressively take over from trams, I guess, because a bus can get the more drop-off spots, when it's sharing the same route as the car. But it wasn't until about the 60s. I love looking back through old photos, Brisbane, Sydney, wherever, and you see trams on roads where there's just trams don't exist in most places. So that's changed a lot. I mentioned air travel. That's changed a heck of a lot. And it's been one of many things that have contributed a lot to the love affair that Australians have now with regional Australia. It's just so easy to get there. I've already mentioned regional development. At the start of this 80-year period of time, Australia's closest economic tie was easily with the US. Easily. Yeah. But it was sort of around about the 80s that started to progressively transition more towards different parts of Asia. I mean, the 1990s was famous in this country for Japanese tourism and stuff like that. And now it's China, it's India, it's Vietnam, it's all of Asia, Singapore, Hong Kong, you name it.
I'd love for you that there's been massive changes in the technology front. So can you talk us through the progression of some of those advances since the distant times of the 1940s?
Yeah, well, I mean, it was only progressively in the 40s that households got electricity. So that really restricted what people couldn't do. But what we saw in the 60s, houses become warmer through kerosene heaters and oil heaters. So you literally used to have businesses. You place in an order and this big truck would come around with a cylinder on the back with oil in it, and they put this big hose in and they top up your oil, and winter months you'd turn the oil heater on. Very environmentally friendly stuff, of course, Bushy. There's the kerosene heaters around then as well. That progressively, we got reverse cycle air conditioners that could provide cooling and heating, but it's not that long ago that was brought in. The 1980s was famous for videos. People at households were going out buying video recorders, and then we go to Blockbuster Video and that sort of stuff, and we get our entertainment, from hiring a video and watching the latest movie. 1995 is when Foxtel come in, and now we're streaming everything. It's only a bit over 20 years ago that all households had their own email address.
Yeah.
Before then, pretty much everything was delivered by Australia Post.
Or the fax machine.
And fax machine. That's right. Yeah. Everyone, in fact, fax was the only way to do it. It's only 2003 that Facebook, was founded. It's only 20 years ago. So much has changed. 2010. I mean, smartphones come in before 2010, but I would argue that the masses didn't all have a smartphone until around about 2010. So, and now everything's online purchasing. So it's changed a lot. TVs didn't come in until 1956, but it was black and white. So it wasn't until about the mid 70s that we had colour TV, but all you had was 3 commercial channels on the ABC.
And then when I brought up in the country, so we normally had 2 channels, the ABC and one other. Was pretty much it for me, Simon. Some great stuff there. I want to sort of pivot slightly now into the world of credit because there's also been a massive evolution in the world of finance. Can you talk us through some of the changes that progressed through that arena?
Yeah, look, without credit, there is no homes. At the end of the day, not just 80 years ago. Housing has always been the most valuable asset that any of us can have. People just don't pay cash for homes, including the convict days. So, and we're not going to have another gold rush, I think, like we had in the 1850s. So credit's critical. And, reading back through the archives and seeing the change in credit, it's phenomenal. 1943, the start of this era we're talking about, well, Commonwealth Bank was government owned, but they weren't just a bank as we know them today. Because they were government owned, they oversaw monetary policy. So the setting of the interest rates was determined by the Commonwealth Bank. The setting of credit policies, the checks and references that banks had to follow when assessing a home loan application was determined by the Commonwealth Bank. That didn't change until, where are we? So APRA, they come in 1998.
Yes. Yep.
not that long ago.
Yep.
The Reserve Bank was not founded until 1960. And initially, the Reserve Bank was doing monetary policy and a bit of credit policy as well. Back in the 1950s, no ifs, buts, maybes. You wanted to buy a home, stump up 30% deposit, or it doesn't happen. 30%, so we had the housing affordability, debate, which has happened every year over the last 80 years and 200 years for that matter. It depends how you hold your mouth. Some people say, it costs me $800,000 now, I can't afford that. You guys never had it that tough. But, it's all relative. The interest rates that people paid was different in different areas. The size of the deposits that you paid. I mentioned two incomes, that we didn't have before. So things are all relative. Private finance was really big for decades here, not just in the 1950s.
Yep.
It was not uncommon for a vendor, someone selling a home, for that sale to occur, if they were a bit more financially affluent than others, they might help that willing buyer either by putting up finance for the whole transaction or for some of it, because the banks would give them only a portion of what they wanted. A lot of hotel owners or more well-respected business owners, on the side, they would lend out money for things like housing. It was common for someone who wanted to buy a home, and this is not just the 1950s, this happened for decades beyond that, for someone to buy a home and sort of say, look, the most that the bank will give me will be $5,000 to buy this $10,000 house or whatever, but they might be able to get a loan against their car or something. So bill of sales, they were known as then, were very common. Mortgage insurance, very important for home ownership, especially getting that first foot in the property ladder. Well, that didn't start until 1965, Bushy.
Yeah.
And it was actually driven by credit unions. Yeah. Credit unions had a big share of home lending until the digital world started. Decimal currency, of course, came in 1966. In the 1970s, money boxes. We all had money boxes. All our loose coin, but it amounted to a lot of money. If you filled your money box up with coin, you could have $10. Now, $10, won't buy you much at all.
Well, put some relativity around it. I used to buy a bag of lollies for 1 cent in the early 70s, mate. So at $10 in a money box went a long way. A long way. Those days.
The Australian dollar was floated in 83. We're talking about credit. Banking deregulation was huge. In the early 90s. So essentially what that meant was some of our bigger banks, I mentioned CBA, Westpac, they become privatised. So they become responsible to shareholders. And it's amazing when you get rid of the political plonkers and you put in entrepreneurial and business-minded people. It's amazing what shit you can happen. If only we did a bit more of that these days, right? But so loan products, we become very creative. Not only could you get credit with, a smaller than a 30% deposit, but the features that were attached to loans, progressively we saw things like offset accounts and redraws and electronic funds transfers. None of these existed back then. You had to go into a branch and you had the old passbook account. So lots of change there. The Australian Stock Exchange was listed in 1998. GST was a big thing. That was supposed to be the tax to replace all taxes in this country. They wrapped up a lot of taxes, but they still managed to leave out things like stamp duty and a bundle of other taxes. But that was in the year 2000. It was also big for property markets because I guess to compensate the initial hit of bringing in the GST, where everything would essentially increase by 10% overnight, there was all these government grants thrown out, for first home buyers especially. So that was big. Mortgage brokers, they existed in the 90s, but it wasn't until the 2000s that they really started to take off. I think in 2002, for memory, there was about 30% of home loans written were via a mortgage broker. Today, it's 70%. Frankly, why would you go to a bank? Exactly. There was a period of time there for about 5 years where there was such a thing as a 106% home loan.
Yeah, I took advantage of one of those to buy an investment property, mate, at the time. So I remember that very well.
And why wouldn't you? I remember, companies don't exist these days, but companies called like Rams, were subsequently bought out by Westpac, but, Rams and a few others, 100%, 106%, where that come from was sort of saying, we'll give you the full 100% to buy the purchase property, but buy the purchase of the property, but we know you've got stamp duty and a few other bits and pieces as well. Guess what? Well, you can funnel all that up in there as well, and that sort of come to about 6%. So it wasn't they gave them to everybody, you still had to prove that, you had a savings pattern, even though you might not be putting any cash in and you had a stable job. But I'm not saying we need to go back to 106% home loans, but there were some things there that I think we can take back out and look at, the housing situation today. We've been through a GFC. Yep. 2008, credit became very hard to get for a few years there. Australian property markets actually stood up really well, but it was harder for people with good, strong credit to get a loan for a couple of years. And then the last one with credit reform, 2015, not that long ago, those crazy buggers called APRA just squeezed the bejesus out of things for a few years there.
It certainly did. There's some really good info there. Now, I want to sort of switch into the old favourite that the media likes to talk about, and particularly in recent years, and that's good old interest rates. So what impact have interest rate changes had on property values, and is there any correlation between the two, Simon?
Yeah, I guess similar to the population thing. Does interest rates influence property markets? Yes, everything influences property markets. Is it the dominant force? It never has been. And again, we've got that same 53 years of evidence here, reminding our viewers the green columns is the change in median house price in each of the calendar years. And look, if anything, I put a big orange box there around a period where interest rates, not only do they go up, consistently go up, but they went up a lot. You and I will remember paying really high teens, maybe even 20%.
17% on my home loan at one stage, at that stage, mate.
Yeah, but look what property prices did. Look at the green columns. And I would argue that they went up a lot more. It's evidence in the 50s, 60s, 70s, and 80s. House prices increased at a much higher rate than any period since then. But interest rates were a lot higher. Recession. The box I put around there is a 17-year period from 1974 to 1992. That 17 years, Australia had 3 recessions. The cost of a house went up 400% in just 17 years with 3 recessions. So now and for the rest of anyone's life, whenever you hear the word recession, beware the economists who will scream doom and gloom and tell you it's physically impossible for property prices to go up during a recession. Call bullshit. In 2020, we had another recession. And we also had a property boom.
The second highest property boom in the history of the country, I think, quoting you on that score, Simon.
Correct. Yeah, correct.
So, that's some pretty good evidence there. Now, I want to sort of switch across to control over property and rents in particular. What, if anything, has changed in relation to those over the years?
Yes. Look, I wasn't aware until the stuff we're talking about here with rent control is not something that you're going to learn in school or economics degree or whatever. I've never heard of it. And I'm 53, mate. I never knew of it until rummaging through all the archives. And the stuff that the number one topic I think that's dominated Australian current affairs over the last couple of years is rents. Yeah. But a poorly controlled message. The commentary has been focusing on the price of rent when the problem is actually we don't have enough supply of rent. And there is all this evidence. Australia had an enormous rental crisis from 1912 through to, in some parts of Australia, 1970. 1912, right? So that's a couple of years before World War One. We already had a shortage. Now, all markets will have periods where there's a bit more rent supply than what we need and a period where there's a shortage. It's just coincidental that in 1912 we had a shortage. That's due to no one's fault. It just is what it was. But then when World War One started in 1914, we lost our skilled labour because they were fighting for the country's survival. So we had an inability to build more rental supply. Of course, rents went up because there wasn't enough supply, and the regulators come in and said, we can't have that. We're going to stop a landlord's ability to increase rent. Of course, why is an investor then going to go and invest and provide more rental supply? I could sort of understand it when you're at war because you literally can't build anymore. And the reason rent controls were brought in during World War One was literally that. The skilled labour's not there.
Yep.
But then coming out of World War One in 1918, the skilled labour had returned. We still kept the rent controls in place. Not long after that, we then went into the Great World Depression. So no one wanted to invest anyway. In fact, Australia's unemployment rate hit about 20%. So why would you be investing? And then not long after that, we went into World War II. So we lost our skilled labour again. So again, through no one's fault, from 1912 to the end of World War II in 1948, we effectively added no more rental supply, but we kept adding the population to it.
Yeah.
You'd think sanity would then prevail when all the wars were over. We got to encourage more investors. But no, we focused on, let's keep a lid on rents because, you know, the tenants can't afford it. And that really shrunk rental yields and discouraged investment. Sanity didn't prevail until, in some states, mid-60s.
Yep.
In some others, 1970, when they said, we actually need to bite the bullet and do the only thing that will fix this. And that's to encourage people to invest in their future. And some will choose property as their asset class to do that, and that will fix this problem properly. So, but from 1970s through to, let's call it 2019, a year or so before COVID, we were fine. Australia was fine. But now we've gone crazy with rental legislation, and we haven't learned anything from all those decades of proof, mate.
Yeah, it just never ceases to amaze me. We keep making the same mistakes. What about rental yields? How have they changed since the 1950s, Simon?
Yeah, so we'll go back a little bit further. 100 years ago, we were having this conversation, mate, as an investor, and we would have been standard 11%. Standard yield. Without even trying, 11%. But progressively, down to the start of this period here, 80 years ago, a standard yield would have been 7%. And then as now, it's not a one-fits-all.
Yeah.
You know, some locations a bit better, you know, some a bit less. But the average, in the 50s would have been about 7%. And that's progressively shrunk, even though the price of rent, like everything else, has increased. When we express that value of rent to the value of the actual property that you have to purchase and convert it into a yield, the yields have consistently retracted. This time 5 years ago, that standard yield would have been, you know, probably 4.5%. Again, Sydney and Melbourne would have been below that. Other parts would have been a bit above that. Today, a standard yield is about 3.5%. Plenty of parts of Australia where you've got a 2 in the front of that. We need to take a good look at that, because rental accommodation is never going to go out of fashion, mate.
No.
We'll always need it. 80 years of evidence, we've always needed it. We always will in the future. And rental returns are important to that.
Hey, stay with us. We'll be back in just a moment as Bushy asks Simon about what Australia was like 100 years ago and about some of the moments of adversity that have actually shaped us. This is Realty Talk.
Successful property investment is a game of finance. Do you have the right team and the right game plan? Realty Talk is brought to you by Know How Property. More than mortgage brokers, Bushy Martin and his team of investment architects set you up with a sustainable strategy structured to lower your costs, tax, risk and stress while increasing your capacity for growth. Know How has helped over 1,900 homeowners and investors secure more than $800 million in property wealth. So get set to live more, work less, and live your legacy. Want to know how to invest in your freedom? Visit knowhowproperty.com.au.
We've touched on a few of these throughout the conversation, but I want you to remind us of the series of so-called world-ending events and moments of adversity that Australia's experienced since the 1920s, Simon.
Well, what we know is it doesn't matter what year we were looking in the archives. There was always, I call it shit happens. There was always something. It was just a different thing. We've spoken about this period started at the end of World War II, but there's never, ever been a single year in the last 80 years where there hasn't been a major war, at least one major war somewhere, always. But yet property prices have gone from $2,000 this time 80 years ago to the current combined capital city average of about $950,000. So don't let anyone tell you that wars will, suppress property prices, because wars have always been there. We've had multiple oil crises. We've always needed petrol over the 80 years, but there's been lots of, some of the wars have been related to control over oil fields, but there's been plenty of times where it felt like overnight the price of petrol at the Bowsers spiked. including now. In Australia, perhaps more than any other country in the world, where there's so many natural disasters, no town, big or small, has been immune to multiple natural disasters over the last 80 years, but the cost of housing still goes up. There's been numerous stock market crashes, some directly in Australia, some globally. I mentioned the recessions, to be specific: 1974, 1983, 1991, and 2020.
Yep.
At the GFC, we had the health pandemic. So that's a lot of stuff, mate, in 80 years. Not to mention, politics and taxes, and always something.
Absolutely. Yeah, and to state the bleeding obvious, and to I guess stress this point, just to reinforce, what impact have any of these had on residential property values, and can you give us a couple of examples just to really underscore that?
Most of those moments of adversity have had no direct impact. Although in the moment, when there's the announcement that there's an initial the fear of the unknown, but that's more a sentiment thing, until we get our head around things. Someone might delay buying, their home or something like that because they've been told by the news that the world's going to fall apart. That's a sentiment thing that in time people adjust their heads and they realise, hey, the world didn't fall apart. I guess there's been a couple that have had a more direct impact. The GFC didn't destroy property markets. We certainly didn't have a crash.
Yeah.
But the effect of the GFC on property market was more a lagging effect. GFC was in 2008-9. Adversity is always followed by stimulus, no matter what form the adversity comes in. Money solves all things, and governments all over the world will always throw money at it, as they should. Whether they throw money in the right areas, well, that's always going to be debatable. They're always going to respond to adversity with money. Sometimes they hit the mark with it, and sometimes they don't. But the GFC is probably the biggest one. I mean, COVID really hasn't had any material impact on property prices at all. In fact, if anything, what it's done is change the way I think a lot of people have considered what they value most. And we've reevaluated our priorities, and there's been lots of people that have moved home or renovated homes or moved town, work from home. So I'd argue that of all the moments of adversity, COVID's probably had the most positive influence of all of them.
100% agree. 100%. It's brought forward a lot of trends that were already in play to our benefit. Actually, in that context. Now, we've talked a lot about what has changed, Simon. What hasn't changed much in property over the last 80 years?
Well, we'll always need rental accommodation. For every single one of those last 8 decades, 3 out of 10 households have been rented.
Yeah. Every
single one of them. Now, in some individual years, it's been 32% rent. In some others have been 28% rent. But give or take, 3 out of 10 households for every single one of those last 8 decades. I would suggest that's a big body of evidence to say to everyone listening to this today, we're always going to need rental accommodation for 3 out of 10 households. So how about we get our shit sorted and start doing what we need to provide rental accommodation for those 3 out of 10 households. That's never changed. The government contribution to the rental pool, one thing that hasn't changed there, it's always been a very small contribution, but the contribution's got smaller and smaller and smaller. Today, our combined 8 state and territory governments and the federal government, they own 9% of Australia's rental pool. So it's the everyday Aussie that owns the 91%, and they're the ones that need to be encouraged to provide more. Interest rates and inflation, they've always been around.
Yep.
There's been lots of periods when they've been incredibly high, a lot higher than what they are now. Negative gearing has been out not just for that 80 years, but for more than a century. Negative gearing is actually not a formal policy. It's just a term that people use. But it will always be around because, well, I assume it will always be around because the tax office will always require people to declare income and claim expenses.
Yep.
And property, the biggest expense is debt, hence the word gearing and negative gearing. The biggest expense will be interest. And in periods when interest rates are high, that increases the chances that the property will run at a loss rather than a profit, hence the word negative. So that will always be around. There was a 2-year window in there where the Hawke government, 85 to 87, thought it was wise to scrap it. And people voted with their feet, and he made the problem worse, so he brought it back in 1987. We've always been popular, highly sought out from overseas migrants. They've become a national security policy, the 10-pound promise we were talking about earlier, to protect ourselves, populate or perish. But I think all World War II did was open up all the other countries to, hey, there's this, what we call the Great Southern Land down under, and all the great opportunities that we offer. That hasn't changed over the last 80 years. I can't ever see that changing. And the great that it brings to our country, the great diverse foods and cultures and clothing, it's been awesome. Housing supply has always been a bone of contention the whole 80 years. The archives are, like every month there's a story somewhere about we don't build enough. Every month there's a story about housing's expensive, including when a brand new house cost $2,000. It wasn't affordable. And we got a newspaper clipping I found in the archives, 1950, front page of the Sunday Telegraph. Only 1 in 5 people stand a chance to buy a home. In 1950, we were saying that. Some things will never change, my friend.
No, there's some really good examples there of exactly that. While we keep thinking it's all happened before. If we sort of wrap a big bow around all this, Simon, what are some of the key takeaway lessons that we need to be heading from all of this?
Well, I think the biggest lesson is we've all heard the saying, safe as houses. I've given you 80 years of evidence to, I guess, show why that term exists. I didn't create it. No one can stack their name to it, but we can see it's true. It doesn't matter what happens to interest rates, what happens to inflation, what happens to population, what happens to the economy, what moments of adversity are out there. Humans always need shelter. Housing is not an index. We always need shelter, and no matter what is happening in the world, good or bad, and we don't just live in the same house all our life. So even without population growth, property transactions still take place because household circumstances change, incomes change, families change. And when people transact in real estate, they create competition, and competition causes prices to grow with or without bloody population growth. I'll keep saying it. It's the existing population that buy 95% of the properties. A graphic I've put together here showing the last 80 years bundled up into 4 blocks of 20-year periods, and showing how many times value did the standard house increase by. So the 20 years ending 1960, so the 40s and 50s, capital city house prices increased 3.6 times. The next 20 years, so the 60s and 70s, house prices increased 6-fold. The next period of time, so we're looking at the 80s and the 90s, they increased 4.4 times. And the most recent 20-year block, they increased 3.7 times. Wrap all that up, and what that says, 80 years of evidence, there's a pretty good chance, Bushy, no matter where it is in Australia today, you buy a property today, and 80 years of evidence, so it'll be worth at least 3 times that, maybe 4, maybe 5 times that over the next 20 years. So if you're 40 years of age and you want to exit the workforce in age 60 in 20 years' time, get busy. Safe as houses.
Beautifully said, mate. It's certainly a very solid foundation. This is not just cherry picking like a lot of data tends to do. This is a long-term look at what's happened over that time, and it's all predicting that there's no reason why that's not going to continue, given the underlying fundamentals are exactly the same. So look, there's some really good examples there. If we sort of paint the picture of what things are going to look like in 20 years, you want to put a bit more shape around that?
Yeah, so I guess I've just making some assumptions based on previous numbers. If history repeats itself 20 years from now, so in 2043, a national population is likely to be about 34 million people. Now, don't say that won't happen, that's too many people. When we had 7 million people living in this country, people were saying we could never survive with 11 million people, let alone 20 million people, let alone 26 million that we are today. So if we've got 34 million population, we're likely to have a housing stock of about 15 million properties. The standard house price, if it increased, let's call it 3.5 times over the next 20 years, a standard house will be worth 2.7 million. That's not a luxury home. That's a pretty basic 3-bedroom, weatherboard house somewhere in Australia. $2.7 million. So Don't moan and groan about housing affordability. They were moaning and groaning about that 50 years ago. It will keep happening. Life expectancy, we're going to live longer. So if you don't want to work the whole time, the medical scientists say that the life expectancy will be about 85. But we're going to have literally millions of people living well into their 90s, hundreds of thousands of people that will exceed a century-year-old. So if you want to retire at age 60, you've got 30 to 40 years of income you've got to find without going to work. Again, get busy, invest in your future.
And the fact that we're living longer is again adding significant pressure to housing demand, because there's more people living longer in some form of housing, which is going to put more pressure on the supply side of the equation as a consequence of that. So we're all heading in the right direction. Anything else to add to that?
I think our workforce, we're heading close to this now. I reckon 20 years' time, 1 in 5 households, they will earn their income from home.
Yeah,
we are very close to that now already. I think a lot of people thought out of COVID, this is a fad that won't last very long. Technology is not going away. If you've embraced work from home and you already love it, I would suggest that no employer is going to be able to drag you back. So that trend is here to stay. 3 out of 5, maybe 3.5 households out of 10 will be rented.
Yep.
But certainly it still will be at least 3. I think some lifestyle trends, if you think about an aging population and technology and trying to crystal ball those things together, I think telehealth, it's not a standard thing now. We tried it during COVID. I think it will become a standard thing. Yeah. There will be some times when you have to be face-to-face with a medical practitioner, but I think we'll be doing a lot more diagnosis by telehealth. I think clean foods, natural environments, home deliveries, yoga, Legree, cycling, all these lifestyle enhancements. Some of us found a liking to during COVID. Some are already doing it, but I think that trend is going to continue. Superannuation, if you are listening to this and your retirement strategy is superannuation, give yourself a slap. That is not a strategy. That is sitting back in a world of complacency, expecting that the money that your employer puts aside in a vault and locks it up for you will be enough when you retire. We are really close to that access age being 70 or more. If you want to exit the workforce before that and your only retirement strategy is super, good luck with that.
Oh, and with governments seeing this massive growing lolly jar in front of them with sinking budgets, we've already seen the number of changes that are occurring to superannuation legislation. So if you think what you're going to do today is going to be the same when you get to retirement age, you're in for a big shock. So if you're not going to start self-funding your own investment in your future, then you really only got yourself to blame.
Absolutely, which leads to my last point on this, age pensions. Today, we spend $60 billion with a B per annum funding what we could otherwise phrase as back-ended unemployment benefits, age pensions. Why? Because we don't encourage investing. This is not a criticism of old people. This is just stating the facts, right? $60 billion per year. Imagine if we actually encouraged investing, how much infrastructure we could build with just a portion of that, right? So living longer, the reliance and not encouraging investing, the government-funded taxes that they collect that need to be, pushed aside for age pensions is going to be an even greater reliance. So invest in your future, because no one else is going to do it for you.
Beautifully said, and what a fantastic run through everything that the past has taught us. So there's some really important lessons there. So I'd really want to thank you for all of these evidence-based insights, Simon, which certainly reinforce that in terms of property performance variances, what stands the test of time is that the more that things appear to change, the more they actually remain the same. And it's clear that property is not reliant on one current dominant driver, but is actually affected by a multitude of dynamic factors that all support ongoing growth. In addition, what's really crystal clear to me is that the ongoing opportunity that property will continue to provide for hardworking Aussies to secure their future lifestyle, for those who actually learn the lessons of history that you've just demonstrated and are brave enough to ignore the uneducated negative noise that they see in the news, that sadly prevents or delays many from getting invested and enjoying the exponential benefits the magic of time, leverage and compounding returns create, is really important that people start now to take some action. So I really want to thank you for this massive wake-up call and reminder, Simon, for sharing your endless hours and years of expert research and to spend the time doing it here on Realty Talk. So thanks, Simon.
My pleasure. Incinerator.
Thanks for tuning in to Get Invested on the Property Hub podcast channel, your home for property investment insights and inspiration. Make sure you subscribe to Property Hub for free. Get your weekly dose of Get Invested inspiration along with every episode of Realty Talk, Australia's top online property show for red-hot property investing news and insights direct from industry leaders and influencers. And finally, I'll see you next time.